It's now been 1 year since I received my first dividend of £8 from National Grid in January. Since then, I've been adding spare money into my account each month, and my average monthly dividend has been growing slowly but surely. I now have the milestone of £100 of dividend income per month in my sights. Seeing how fast this year has passed and how my account has grown has made me even more determined to continue with this investment journey. Time is going to pass either way, so you may as well take advantage of that via compound interest. So without any further ado, let's get into the numbers. As always, the information in this video is not meant as financial advice. I'm only sharing my own experiences. Also, stick around to the end to see what I'm buying this month. In ascending order now, from the lowest to the highest, first off this month, I was paid £4 by the Vanguard S&P 500 ETF, which mirrors the performance of the S&P 500 as a whole. The US stock market has a very strong record of growth, and if I wanted to simply invest and forget, this is likely where I'd be putting my money. VUSA pay their dividend of 1.3% on a quarterly basis. Next up, it's Unilever in the consumer staples sector, who paid me £7. Unilever are a huge global company that do business in over 190 countries. Unilever also own many well-recognised brands such as Dove, Ben & Jerry's, Magnum and Vaseline. That being said, Unilever has had a fairly rough year, down around 11%. From what I can gather, this is due to inflation in general, as well as a poor performance from the ice cream segment of the company in particular. I personally see this as an opportunity to reduce my cost basis with Unilever, and I plan to add to my position soon. At this lower price, Unilever now pay a pretty decent dividend of 4% quarterly. Into the double figures now, and the iShares Core FTSE 100 ETF, which paid me £10 this month. Just as VUSA tracks the performance of the S&P 500 as a whole, ISF tracks the performance of the FTSE 100. I'm currently working on increasing my holdings of both VUSA and ISF, as well as the Vanguard All World High Dividend ETF, until these three ETFs make up around 50% of my portfolio. Knowing that at least 50% of my portfolio will deliver results in line with the market gives me peace of mind. ISF has a pretty solid dividend of 4% and it pays out 4 times a year. VHYL paid out £12 this December, making it my second highest dividend this month. The Vanguard All World High Dividend ETF comprises of around 1,800 or so dividend paying companies from all over the world. VHYL currently has a dividend of 3.6%. By far and away the biggest dividend this month is from HSBC in the financial sector, which coughed up around £35. It's been a good year to be a holder of HSBC, which is up around 15% year to date. In addition to this, HSBC has churned out a very solid dividend to boot. HSBC have a dividend of 6.9%, which it pays out twice per year and has a dividend cover of 1.4. A total of £67 this month marks my 4th month with dividend income over the £50 mark. £50 per month is something of a psychological milestone for me, and it motivates me to see this figure being surpassed more and more frequently. I know dividend investing isn't for everyone, and you'd likely do better by simply investing everything into the S&P 500 over the long run. But it's these constant little breakthroughs that keep me hooked and ensure that I continue investing each month. This chart shows the average monthly dividend income as opposed to the actual, and it's a much better indicator of where I'm really at. This is because the actual dividend income varies so much month by month. I surpassed an average of £50 per month in November, but I didn't get a chance to make an update video then, so I'll address it now instead. I've reached many smaller milestones so far to get to this point, but there's something that just feels a lot more substantial about this one, and I'm really happy to get it ticked off the list. £50 per month is clearly not life changing, but it's enough to cover some smaller outgoings such as a phone bill for example, which does give me a kick. The next logical big round milestone is £100, so I'm going to set my sights on that one next. I'll continue to add around £1,000 to my account each month, and all else being equal, I should reach the £100 milestone just that bit faster than I reached the 50. This is due to the fact that I now have an average of £58 extra going into my account each month, on top of the $1,000 that I add out of my own pocket. This is the early stages of the snowball effect at play, and it's why I personally love dividend investing. The total dividend income I received in 2023 was £425. My goal is to surpass the 1k mark in 2024, which shouldn't be an issue so long as I keep investing at the same rate and there are no major disasters in the market which could cause dividends to be cut. These are the actual dividend returns I get on each stock that I own, and may differ from the amount you'd get if you purchased today. This is known as yield on cost, and it's dependent on the average price you paid for the stock. The yield on cost across my portfolio currently stands at around 4.9%, which is up from 4.7% last month. My aim is to keep the yield on cost across my portfolio between 4 and 5%. Any less than this, and the dividend returns would probably not be sufficient enough to keep me interested in this style of investing. Let's go over to Trading 212 now and make a purchase. Bluefield Solar Income Fund is down a few percent since I made my initial purchase. I've checked out the fundamentals, and at least to my knowledge they remain strong. Therefore, I see this lower price as an opportunity to reduce my cost basis and in turn increase my yield on cost. Bluefield have also increased their dividend in the time I've been a holder, which makes adding to my position even more attractive. Here's a look at January's ex-dividend dates. If you're considering purchasing shares in any of these companies, make sure to do so before the dates listed here to be entitled to the dividend. I personally like Sage, which has had an amazing year with gains of around 59% and impressive full year earnings results. That being said, I really feel like I missed the boat on this one. I did actually consider it at the start of the AI boom earlier this year. However, an issue I have is that if I don't get in right at the start of the move, I feel like it's already too late. I then have to sit back and watch the stock soar for the next few months. I did exactly the same thing with Rolls-Royce, and I'm still kicking myself over that one today. If you're interested in starting your own portfolio, then check out this playlist to see my own journey from day one and get an idea of how things play out over time with regular monthly contributions. As always, thanks for watching and happy investing.